Hello everyone and welcome into the channel. My name is Brent and in today's video we are going to be taking a look at all options for the month of April 2023. We're going to go ahead and take a look at the accounts between Fidelity and Merrill, taking a look at all the shares that we had sold options, call options on, purchase call options on, or rolled call options for the month of April. And if there's any information that you guys may not be seeing that you guys would like to maybe potentially see, let me know down in the comment section below. I'm still working on what kind of information is optimal to kind of present and showcase, and it's just a lot of fun. I have really enjoyed doing options. I think that's the main thing that I do now versus just I don't buy and sell a lot of holdings. I just kind of mainly hold on to the holdings that I do have unless there's some other better option, which we covered with the Fidelity video. If you guys haven't checked out that video, it goes over the reason why I sold out of VU and moved into SCHD. But we'll go ahead and take a look at the options for the month of April. So again, if you guys have not yet subscribed, go down below, like, comment, subscribe, and let's go ahead and get into the video. So popping over into our first option that we did in April. So we're gonna go by date. So at the very end of March, we had an option chain open. So I didn't start with that here, but we're gonna cover what we sold here towards the end of the video here. So I ended up purchasing back my shares at $7 per option times 100. I paid $700 times 4 to close out my option at 405. At this time on April 12th, when I was closing out this option, this contract didn't expire until the 14th. Actually, yeah, it was expiring in 2 days here. So the contract was expiring on April 14th, 2023 with a strike price of 405. The strike price, the share price had already climbed to $408, and that had actually been a bit of a dip in that time right there. So I said, hey, I'm going to take this dip that I'm getting at this moment, and I'm going to go ahead and buy back my option because I don't want to sell out of my shares of SPY. So I went ahead and paid $2,802.60 to close out of the option. And then I turned right around and I said, okay, let's shoot out another month out. Instead of April 14th, let's shoot for May 26th at a strike price that were the market had potentially been boiling up. No bad news is good news for the market. So it had been simmering slightly, to the upside. So I went ahead and struck a strike price slightly at where we had recent highs here in 2023 of $416 and some change. And I was able to sell these at $7.84 or $784 per contract times 4. I was able to collect $3,133.37. If I had just waited a little bit longer, I'm sure I could have collected a little bit more premium, but that was okay. I was able to wash away my previous negative. We'll take a look at all of this at the very end. Did I lose money? Did I gain money? We'll have a better idea here towards the end. But I purchased those shares and I resold them right back. So I was able to collect a little bit of difference there. So I didn't lose anything here. But if I had not done this, you can see here by the 14th right here, the share price had already closed over $412, I believe, at that point, which would have made this option much more expensive to purchase back. I would have had to sell out of my shares at 405 way back here. So the difference there is like $7 times 400 shares. So it's $2,800 that I paid for it, right? But in paying for it, I was able to keep my shares, which essentially kept that equity, and then I just resold the shares, the call options there for a future date. And then at that same time, in our previous video where I went over why I sold out of VU and moved into SCHD, I also sold an option over that way. So I had 100 shares of SCHD. I sold it at a contract of 0.31, was able to collect $30.31 after commission and fees. So that was $30.31 in options from SCHD. Later on that same month, on the 21st of April, we had VTI right here. It was trading at $205. My strike price was exactly $205 and it was expiring on the 21st. So you can see these took place on the 21st. I was like, oh man, looks like the market that day had been going wild. It was up above 205, it was down below 205, and I saw, hey, I could buy back these call options for 27 cents on, per contract. So I don't want to exactly sell out of my shares at 405. This market's still kind of simmering to the upside. There's really, so far, earnings has been very positive. There's really nothing outside of financials and banks that have been overly negative. So I went ahead and purchased back my shares. I paid $27.65 to close out of VTI within my account. So I paid $27.65 here, $27.65. So on the same date that I would have had to sell them at $205, I just purchased them back and then resold them with a new strike price and a month out on May 19th. That's my birthday, with a strike price of $210. And I sold them with VTI here. The contract was 118 and the other contract was 125. I don't know. I kind of sold them a little bit spaced apart because one of them is within a Roth IRA, the other one's in an IRA. So it does take me a little bit of time to kind of flip between the accounts really quickly and, punch in the information. So here I was able to collect premium of $117.34. And here I was able to collect $124.34. So essentially, all I did was buy back my calls. I basically paid $52 there to close it, and then I just increased my strike price by $5 and was able to collect $241 and some change there in premium with a higher strike price of 210. So far, the strike price, I believe, it's still slightly below. Yeah, this is accurate as of today. So the strike price, or the current price of ETI, is trading at roughly $206 and some change. So we're still about a month away till May 19th. So we still have some good amount of wiggle room for this contract because this one is still open. Moving on. So this is all on the 21st. Then you can kind of see what took place a little bit ahead of the 21st, right? Now, jumping over into the 26th of April. 26th of April actually gave me a really good opportunity. We saw that the S&P 500 had been in this range of $412 to $414. It had been trending kind of sideways here. All of a sudden, what took place? The S&P 500 fell very quickly from about $412 all the way down to $404.36. It actually broke into the $403 range, hitting that 50-day week high, or that 50-day average. It used that as support. So that it was heading down to that 50-day moving average. A lot of investors that I was talking to, they actually sold out of their S&P 500 at 412. They're like, look, market's not going to be boiling any higher. I sold out of $412 and some change. They netted positive. They were happy. And then a few days later, guess what? The market fell down to 404. They're like, yes, that was perfect timing. They got out of the market at 412. It was at $404. I saw this and I was like, okay, this made my options very cheap. I was able to repurchase these shares up here that I had sold for $7.84 per contract. I was able to buy those back for $2.80. So I was able to buy back my 4 options at $280 times 4. I paid $1,122.60 to buy back the options for $416. That had a strike price of $416. They still wouldn't expire until the 26th of May. But they were so cheap on this date because of that dip to the downside that it just made sense to kind of buy them back. I'm sure the market would do something fun and exciting. And, when I sold them up here, I collected 3,133, right? So when I closed this position out, I netted that difference of nearly $2,000 there. And then I saw that the market started creeping back up. In all honesty, I should have waited a little bit longer. You can see that I bought them at 280. I did wait for the next day here. You can see I closed these on 426. I waited a day just to kind of see what the market was going to be doing. Was it going to go lower below that 50-day moving average? Was it going to go higher? And the market took off to the upside. I saw that I could resell those options once again at 425, which I did, and I sold them for a total of $1,697.39. Now, looking back, obviously, you can see here I sold at $4.80 right here on the 27th. So it was almost end of day. I was like, the market had already put on such a big gain. I was like, I think it's going to take a break. I think we're going to be good. I went ahead and sold my call option at around $409.78. I netted that $4.25 there. But what did it do? It continued to climb. Market climbed higher and higher and higher throughout the rest of the week there. And currently that option that I sold is trading now for $7.11. So I could probably sell 4 contracts for $7.10. And the difference there would be $7.10, $710 times 4 would be $2,840. So that would have been a very nice difference, but unfortunately, I wasn't able to wait because I honestly, I didn't know. I was still getting a good deal, right? I'm not sad that I didn't get the opportunity because I did, in a way. I locked in $2,000, turned right away, was able to sell it and make a difference of a little over $560. But at the same time, I'm happy with that. It could have been better, but it's okay. So all in all, for the month of April 2023, you can see here, I bought back those shares early on in the video for $2,802.60. That did put me into the negative bucket by $861 from the previous, when I sold them, I collected $1,941.38. When I bought them back, I did go into the bucket negative $861.22. But when I resold them here, I collected $3,133.37. The stock market fell like a rock on the 26th. I was able to buy them back super cheap at $2.80, paying $1,122. I was able to collect that difference of $2,010. And then here's that Schwab. This is where I sold out of VU and moved into 100 shares of SCHD. I sold that contract. I collected $30.31 in premium. That's still an open contract. That's still, when I sold this call option, I had a difference to the upside of 3.35%. So this is going to expire on 5/19. That's less than a month away. The market closed here on Friday at $72.57. The market needs to move 3.35% for this call option to get pulled away, for my shares to get sold off. So very little risk in this happening over the next month, or less than a month. VTI here, still open contract. That's worth $117.34. The market would have to move 1.79% on both of these because it's currently priced at $206.30 with a strike price of $210. Market still needs to move 1.79% as of right now. There's not a lot of safety for investors that are buying into this. Right now, if anybody's buying into the market, you're buying at the unknown. You don't know if the market's going to move higher. You don't want to be that first one that bites and then the market drops off a cliff in the next few days. So everyone's kind of waiting. What's going to happen? Are we going to move higher? Are we going to close above that recent high for the year? Or are we going to kind of bounce off here and kind of go back down into our range that we've been kind of moving in the last few days? So I'm still pretty confident that these options here for VTI are not going to expire in the money. They're netting me 117.34 and 124.34. And then SPY, this is still an open contract. We sold 4 of the contracts at $425, netting us $1,697.39. We could have made roughly another $1,200, but that's just as of today's prices, which it's hard to know on a day-to-day basis what the market's going to do. This could have gone to the negative as well, right? If the market had fallen this could have been worse, and I would have not made the amount of money that I did make. So I'm still happy with the performance here in the month of April. In total, I was able to net $3,118.93 of premium for the month of April. We do have 4 open contracts, so SPY is the closest one to. I have to update the date here. So that one doesn't expire till 5/26. So it still has about a month remaining. The market right now, I'm pretty happy if S&P 500 moved over $416 and close, not just 416. It would have to actually go above $417 and close above 417 to kind of show that, hey, we broke above that resistance. Then that could eventually either be the new base, or it would just kind of sizzle and we would kind of fall from there. It's still unknown as to what will happen in the future. So that is going into May. Oftentimes, the summertime is the least active. The whole saying, sell in May and go away. It just means that summertime, there's not a lot of activity. So we may see this earnings season end. The big tech companies, Facebook, Meta, Amazon, Tesla, what else? Apple. They've already announced earnings. They're going to have the biggest effect on the market outside of healthcare. And right now, where everything is priced at this moment, do we have anything that's really going to push the market into new all-time highs, or are there still things in the economy that would negatively impact the market, negatively impact the overall performance here going into May 2023? And at a 50-50, I would say that earnings has been positive. That is the reasoning for the market moving up after it tested that 50-day moving average, but it still has yet to break above that year-to-date high of $416 and some change. So we shall see where we'll be in the future. So I'm pretty happy with the performance overall. If you guys have any comments or questions for me, let me know down in the comment section below. I did have someone actually send me a message, I believe, asking about options, how much I am invested into the companies that I'm running options on. SCHD is a new one that I've recently started doing options with. But if we were to include that, we could do the total of equals 72.57 times 100, because we only have 100 shares of those, right, to do options. BTI cost equals $206.30 times we running 2 options on that. That's 200 shares. And SPY is $415.93. Actually, let's go ahead and equals $415.93 times we're running 4 options on that. That's 400 shares. So grand total there, let's do equals, and it's that amount. So we'll go ahead and do sum, and then the sum of that is, so in order to run the contracts that we're currently running, it takes about $215,000 to run the contracts. We did net 3118.93. So we'll say 3119. We'll just round that up, for example. And the amount of premium that we made percent-wise, we'll take C27, so equals C27, divide that by F27, and I believe this should get us, this is a percentage. So the amount here that we collected of $3,119 of premium, of the amount that we're using for options, netted us back 1.45% just in premium alone. So that's a pretty good return on a month-to-month basis. I don't know if I can keep that up. I would love to aim for about a 1% per month. I know in the past, you can see here in the month of April, we actually were negative 2,023. In the month of February here, we were positive 2,589. In the month of March, right here, or was it here? Yeah, March 30th. We were down 104, and then in the month of April here, if we didn't have that loss there, I already included in that previous numbers, we'd be up $3,980. Overall, so far for the year, we're at $4,441.24. So 444,124,444,124, like that. Overall, you can see that on average, we're only netting back 0.5%. Oh no, yeah, we're on the fourth month, right? We just finished the fourth month of the year. So over the past 4 months here in 2023, we've only averaged back 0.5% of our, well, we weren't using Schwab before. This is newly added to the portfolio. So this will maybe help a bit, but we'll see how it goes. The market has definitely been interesting over the past few weeks. So we'll see how it continues to perform going into May, towards the end of the year. Regardless, right? This is all this is all extra. I never used to collect option premium in the past, prior to 2018, 2019. So I would mostly just collect dividends and never had collected premium in the past. This is something that we started back in 2020, 2021, and has done really, really well for the portfolio, just adding extra premium that we're able to use to buy back more shares, which we have been able to do historically over the last 2.5 years now. So I'm happy so far with the performance. So let me know down in the comment section again. If you guys have any other comments or questions, let me know down below. Otherwise, I will see you guys in the next video. Like, comment, subscribe, and stay tuned for the next video. Bye-bye.